Summarizing some of the primary industry players in finance, we have commercial banks. We sometimes call them retail banks because they're there in the street working with individuals and businesses. They accept deposits, sometimes in a savings account, sometimes in CDs. They make loans to businesses and individuals, and that's what they do. That's a commercial bank. Next are mutual funds, and they manage investment funds for investors based on a stated investment objective. So they'll tell you, are we taking high risk with small companies or lesser risk with larger companies, or a blended or balanced portfolio of stocks and bonds in all types of organizations. Insurance companies charge premiums, they invest the proceeds, and they're there standing ready to pay claims if and when they occur. Pension plans accumulate and invest and distribute money to retired employees of a particular company. Investment managers for a corporation have the job of investing excess cash the company may have so that they can earn some additional return and let that money work for them. Private equity, hedge funds, and venture capital firms are not exactly in the limelight all the time in publicly traded companies. However, they are private firms that have very specialized investment expertise. That's why they have different areas of focus. Venture capitalists work with very small companies, startup or growth companies. Hedge funds use different techniques to invest in looking at certain opportunities presented in the securities market. And private equity firms do large transactions to buy segments of companies that companies want to dispose of or just exit the business. And they work with those to improve the performance, their financial condition, and then sell those back to another company or have those go public. So private equity firms deal with essentially undermanaged or undercapitalized or underappreciated companies and do something with them to earn some money, of course. Next are private investors. You and me looking for a way to earn a little money based on our savings. And we put them in stocks, bonds, or mutual funds in order for us to save for our future purposes. Investment banks, they have wide expertise in the securities markets, and they're also good advisors because they understand how large transactions work, whether they're capital transactions like fundings of equity or debt, or in large transactions that sell companies and buy companies, what we call mergers and acquisitions. So they're kind of the big game hunters because they work with large companies and large transactions, and they're an essential part of the market to access capital markets for those who need and deserve to get public funds. Next are securities firms. They assist clients in buying and selling securities, as we just mentioned. The SEC, they are in charge of regulating the public markets and trading. Next are the exchanges, New York Stock Exchange, NASDAQ, or American Stock Exchange. They are marketplaces where people with stock can go to sell to people that want the stock. And that happens all year long, Monday through Friday, except holidays. And finally, the IRS. They're standing back waiting for people to make money, whether that's interest or capital gains, because guess what? They get to collect income taxes from those who earn money, and they get their share or a share of the profits earned by investors.